YouTube fam, Fat Man Zoom here. By now, you've heard the news that Penn missed their earnings horribly. And you may be asking yourself, well, since they missed, why is the stock moving up? Well, that's where I come in. And because I'm a man of the people, I've taken my time out and I've listened to the earnings call. I've read the transcripts and I'm here to tell you why. I'm going to give you 3 reasons why I'm bullish on it and why I think this run could continue. So we'll go over that. I'll go over the technicals and we'll talk about some entry points, exit points, and then we'll see where this thing can go. All right. So first, let's get the numbers out of the way. Earnings, their expected earnings per share were 21 cents. They came in at 7 cents. I mean, that's bad. All right. Their revenue is expected, I think, 1.09 billion. They came in at 1.03. Not too bad, but you still should beat those revenues. And what people always get frustrated by is, well, a stock misses, but they go up, and then a stock beats and it goes down. How does that make sense? You got to remember that the market is a forward-looking vessel. So the fact that you met or missed expectations, that price was already baked in. What they want to look at is what's going on in the future. And Penn gave us a lot. So when you see, if you hear raised guidance, if you hear about things that are new that we didn't expect, right? Like these things are new items that can be priced into the stock that may cause it to move up. Or if you don't give any new information, it could cause profit taking, so it can move down. So let me talk about the first thing that I think was important in this call. So Jade Snowden, the CEO, did a really good job of navigating this earnings call because in light of, or despite the negative numbers, he actually painted a really awesome picture. And one last note before I get into it, the other thing to consider a move off of earnings is you can miss earnings, but you have to have a clear justification. So he started the call by acknowledging that they missed earnings. He also mentioned, as we know, COVID was a factor, right? We had some reopenings of casinos, but they had to reclose them, which wasn't expected. So that affected their guidance. The other thing was that he mentioned, and this is key, people, he said, we were on track to beat expectations before the reclosings. Okay. So that was key to sort of settle down anybody who would freak out by a miss. Then he went into all the other good stuff in the vision. So first, strategic partnerships. Choice Hotels, Barstool Sports. Choice Hotels, he talked about the rewards program, and they're having a strategic partnership where their brick and mortar locations, they could redeem points and earn points through that partnership. That's 20 million My Choice customers, which is an opportunity for growth, for customer acquisition. All right, so that's a nice little bump. But the bigger one, and we know, is Barstool Sports. Listen, if they didn't have Barstool Sports, they wouldn't be on this channel. I wouldn't be talking about it. They would be far behind as far as looking at the competition. But their acquisition of Barstool Sports continues to pay dividends, and we're only in the infancy. So let me give you a couple numbers. Barstool Bets, which is the betting platform, we know launched in Pennsylvania in September. Since September, they gave us some numbers. 72,000 customers acquired. Now, keep in mind about Pennsylvania, they were already open for gambling. So FanDuel was there, DraftKings was there, among others. So they had already had market share. So it was tougher for them. It's going to be tougher for them to convert. So 72,000 customers since September, $300 million sports handle. And they were showing growth, and they had their best month ever in December. Okay, so all that looks good. Let's put this in perspective. Michigan, which we were most excited about, the founder of Barstool Sports, which is Dave Portnoy, he went to Michigan. We thought they were going to dominate, and we thought because everybody had an equal starting line. So Michigan opened for everybody at the same time. So Barstool or Penn didn't have the challenge of trying to steal customers away. They just had the challenge of converting people to their platform as opposed to others, which is not a hard case to make. So in 10 days since launching, they had 48,000 customers. Remember, in nearly 5 months, PA had 72,000. So they're going to blow that number out of the water in 5 months. 48,000 customers and $27.5 million in 10 days. And what do we have this weekend, folks? The largest betting day of the year, the sports betting day of the year, and projected to be the largest sports betting handle for any Super Bowl in history. $500 million. How much of that is Penn taking? So that all happened in 10 days. Michigan, we were excited for leading in, and they're showing that they're going to dominate that space, and they could end up being number one in that space. So excited about that. The second sort of category I'm excited about is the growth prospects. They're using a non-traditional marketing strategy. Their acquisition of Barstool was really supposed to be their marketing arm, and they've executed on it flawlessly. Jason mentioned numerous times how it's exceeded expectations thus far. Will it face challenges in the future? Sure. But up until now, it has been picture perfect, in my opinion. So they have this non-traditional strategy. Barstool Sports, they have equity in it, a third equity. And from a long-term perspective, the reason why you should be really excited is because they are going to have 100% or nearly 100% equity in Barstool in 2 years. So if they only have a third now, imagine what that looks like in 2 years. It goes what it looks like for their balance sheet. That's really exciting for them. So it should be fully owned in 2 years. Long-term account looks good. They should be live in at least 10 states by the end of 2021. Short-term, it looks good. The Barstool brand has 27 million followers on TikTok, 26 million followers on Twitter, 52 million followers on Instagram, and they're all growing. And TikTok may pass all of them. So that's huge. And with Barstool, the reason why it's so exciting is because their approach is different, where they're investing not in just ads, right? An antiquated system. They're investing and spending their money in influencer marketing. So getting people like Logan Paul, they signed up on this last quarter. Nick Merckx, who's based in Michigan, huge gaming community following. I think he has like 2.5 million. Don't quote me on that. And then Jake Paul. So Jake Logan Paul, which also they're going to be offering opportunities that they can promote their fights, which is just betting revenue coming in. All this stuff is crazy, beautiful. It's going to keep happening, keep growing. They, in addition, another growth topic, they plan to open 4 new physical locations, not reopen, open 4 new locations. So they bought the Hollywood Casino that's in Perryville, Maryland, a whole new state they haven't been in. Also about to release online gaming this year, hopefully. They bought that casino, which will open and be Penn this year, mid this year, potentially. And then they have 2 in PA, and the 4th one's yet to be disclosed, but 4 new locations this year. Physical, that's great. Hopefully some of them will have the Barstool brand, which that Barstool Sports bar is huge. They talked about how it's bringing in a younger demographic, and they're already saying minimum 25% growth in both of the locations that they've launched so far. All that stuff's great. The third, and possibly the most important piece of this whole puzzle, least sexy for sure, profitability. So Jay Stone was talking about the growth strategy and managing the balance sheet. And what he said was, if we wanted to, we could be profitable this year, but we're trying to ramp up. We're trying to scale. We're trying to grow with these new markets that passed legislation for 2021. So they got to spend money. Fair. At minimum, he said they should be break even. And what we've seen for companies that become profitable from a publicly traded stock perspective is that quarter that they report that they're profitable, they boom. So you want to be in before that. So that means, again, from a long-term perspective, when they project they're going to be profitable, and when that happens, those should be 2 spikes to the stock, and it's off to the races, pun intended. So all these things are just a perfect storm for this company that shows that they're aimed in the right direction. They know what they're doing. They have a clear plan. It's clearly differentiated from their competitors, DraftKings, FanDuel, BetMGM. And that gets me excited. They're planning on spending a little bit more towards advertising revenue, which they haven't really spent a dollar since COVID. So the fact that they're going to infuse that should be a shot in the arm to the company. So excited about that, guys. If you got any thoughts, put them in the comments. If you guys like another gaming stock, because we're bullish on all of them. DraftKings partner, or ARK put a big investment in DraftKings. That got that thing moving. There's a bunch of gaming stocks out there. You guys have been asking me about it. Throw it in the comments. Let me know. What do you know about Penn? Let's look at the technicals. All right. So you thought I was going to leave, didn't you? I actually thought I was going to leave too. All right, Penn, let's look at Penn. So I just want to show you real quick earnings. If you look at this yellow shaded area, that is pre-market today. And so the low, initially off the news, the stock moved down and it moved down. Oh, hold on one second. It moved down to around 105. This thing is dancing out of my way. So I'll tell you this while TradingView is trying to figure itself out. So it moved down to 105, but then it promptly moved up, broke all-time highs. Now it's currently sitting at 113.74. Let me just go ahead and put it to the 4-hour chart. All right. Slide this puppy over. I'll zoom out a little bit. All right, so the 4-hour chart, look at that. Isn't that beautiful? So if I'm not in it right now, which I'm in it currently, I'm running with this. All right, I'm hoping this stays above that 112 support. If I wasn't in this stock, I'd be patient. I'd wait for some profit taking, which could potentially happen tomorrow, Friday, towards the end of the day. We know that's typically a shopping day where things tend to sell off. 105, that support seems pretty solid. That's where I would be looking to get in if I'm not in this. If this thing falls below 100, I'm loading the boat. Let me be clear. So as far as an ad, below 112 is an ad if you're currently in it. And then anything below that clearly. But to get in, I would definitely wait, see how this plays out, because there will be a profit-taking day. Prospects for the future. I mean, for me, a price target for this one is short-term, 120 easy, but this thing should be 150 by the end of the year. And I'm going to be honest, I wouldn't be surprised if at the end of this year, it actually hits 200. A bit bold prediction, but that could happen, guys. Thanks for checking out the video. Make sure you like and subscribe. Fat Man Zoom is out.